Okay, in part one, I gave you two tips on creating strategies, two ways to create strategies, and those were candle lows, candle highs, and candle closes and candle opens. Okay, in this video, we're going to be talking about previous day highs and lows. Okay, over to the charts. Now, again, like I mentioned in the previous video, I haven't planned out these examples I'm going to be giving you, and that's because I don't want to cherry pick. I want you to see that these things occur daily. These examples I'm giving you are littered all over the charts. So you should be able to go into the charts and backtest and find out which one suits you and which one you would like to create, you would prefer to create your strategies based on. Okay, so over to the charts. Now we're looking at previous day highs and lows. I'll just crunch up the chart. Now, a previous day high and low is basically the highest point of the previous day and the lowest point of the previous day. Now, looking at this, these vertical lines that you can see here, the dotted lines, are basically demarcators from day to day. So this just shows this is the beginning of today, this was the beginning of yesterday, and so on and so forth. Okay, now I will put this horizontal line at the high of yesterday and put this horizontal line at the low of yesterday. Okay, and just by mere looking at it, you can see how price today came down here. I'll increase it. You can see how price came down here and bounced off the low of yesterday. Can you see? It bounced off, couldn't close below, went up, hovered a bit before it was able to close below. And then can you see how it came back up here, bounced off the low again, went back down, could not continue downwards, and then started going up. Can you see? So this can be considered as having bounced off yesterday's low. Okay, that's one. I'll scrunch it up again, and we will go to another day. Now, when price, I'll just mention it, that when price gets to the high of yesterday, if it gets there today, I can almost guarantee there will be a reaction. I'm not saying it's going to stay below or it's going to break and shoot up, but there will be a reaction. And that's because it is important. It's that simple. Highs and lows of previous days are important. Okay, so I will scrunch it up again and pick another day. This time, I'm not going to pick a bounce. I'm going to pick a continuation or a break. So this line was the high of 3 days ago. This was a high of 3 days ago. Okay, now I'll just go back there. Now this is the line I've put there. Can you see how the next day, that's 2 days ago, price didn't really reach, it didn't reach that line. But yesterday, price opened here and then went up here and even almost, should I say almost gapped above it. That's because it was trying to break it with full force. So it created this big green bar and then went up, came back down to retest this high, which is the high of the other day, and then went back up before it came back down here and then broke back down. This is a clear confirmation without even planning these examples. This is a clear confirmation that price reacts to these levels on the charts. Highs and lows of previous days, price reacts to them. There's nothing you can do about it. There's nothing you can do to change it. All you need to do is react to the reaction of the market. All you need to do is backtest and say, what happens when price reaches the high of the previous day in the Asian session, in the London session, in the in the New York session? That's what you should be asking yourself. What happens when it reaches there within a certain hour, within a certain time frame, within the market open? What happens when it bounces? What happens when it breaks with full force? There are so many variations of strategy making. There are so many variations of reaction to the market, of reactions to opens and highs, and or rather opens and closes and highs and lows. There are so many of them. All you need to do is pick what you want. It is okay. I wouldn't say it's that easy to create a strategy, because yes, you need to back test and you need to uh, um, try different combinations and permutations, but it is that straightforward. It is that straightforward. Okay, so that's really it. That's really, I can go on. I can go on and on and on, to show you examples of price reacting to the highs and lows of previous days. Look at this one. Look at this day. This was on the 10th of June 2026. This was the high of 9th of June 2026. And look at what it did. It created a high here. The next day, price came and broke this high with full force, with a massive bar. But it was like, you know what? I'm not strong enough to continue going. And then it bounced back down. Do you think this happened by chance? No, it didn't. It was reacting to this high here. Okay. So that's it, really. All you need to do, like I've said, nothing works all the time. You cannot find any pattern in the market and trade every instance of it and expect to make profit in every instance of it. That doesn't exist. Okay. What you need to do is find out the highest probabilities. Are the highest probabilities of previous day high breaks during a session open? Are they during the session close? Are they during the first hour of a session open? Are they during... There are so many ways to do this. So many ways to do this. All you need to do is spend time on the charts. If you're not willing to spend time on the charts, then maybe you shouldn't be trading. But if you spend time on the charts and you work with these tips I've given you, you will be able to build your strategy. Guaranteed. Okay. Now, I think I'll stop here in this video. I will leave the other two tips for part 3. I believe that will be the last part of this series. But with the tips I've given you already, you should be already creating your strategies. You should already be able to create your first strategy, if this is your first, or even multiple strategies, because all you need to do is spend time on the chart, back testing based on what I've given you, and you'll realize that creating strategies is actually easier than you thought. See you in part 3.